Remember 2021? It was a year that started with a bang, and not just because of the New Year celebrations. Remember that whole crazy thing with GameStop stock? It wasn't just a blip on the radar, it was a full-blown phenomenon that took the financial world by storm. It was wild. People on the internet were buying tons of stock in companies that nobody thought would succeed. Online forums and social media platforms were buzzing with excitement and speculation. It was like the internet decided to play the stock market like a video game. People were using apps that made trading feel like leveling up in a game, complete with flashy graphics and instant feedback. And you know what? They kind of won. Against all odds, these amateur traders managed to drive up the stock prices, causing massive gains and shaking up the traditional financial systems. This is the story of meme stocks. Stocks that became household names not because of their business models or earnings, but because of the sheer power of internet hype. These stocks became famous because of hype on social media, not because of their actual financial performance. Influencers and everyday people alike were sharing tips and strategies, creating a frenzy of buying activity. It was a total shock to the system. Traditional investors and Wall Street veterans were left scratching their heads trying to make sense of this new, unpredictable market force. And it showed everyone that the little guy can sometimes beat Wall Street at its own game. It was a David versus Goliath story where individual investors proved that they could make a significant impact, challenging the status quo and rewriting the rules of the game. So, what exactly is a meme stock? Imagine a regular stock. Now imagine that stock wearing a funny hat, dancing to a catchy song, and going viral on the internet. That's basically a meme stock. It's a stock that gets super popular on social media, especially on sites like Reddit and Twitter. People share memes and jokes about the stock. They encourage each other to buy it. This creates a ton of hype and drives up the price, often way beyond what the company is actually worth. The rise of meme stocks is all thanks to the internet and the power of online communities, specifically a subreddit called Wall Street Bets. This is where it all went down. Wall Street Bets is a forum where people talk about stocks, but it's not your typical financial forum. It's full of memes, jokes, and risky bets. It's like the Wild West of investing. The poster child for meme stocks is, of course, GameStop. You remember GameStop, right? The video game store? Yeah, that one. It was the go-to place for gamers to buy the latest titles, trade in old games, and browse through a treasure trove of gaming accessories. But who would have thought that this humble retail chain would become the center of a financial revolution? In early 2021, GameStop's stock price went absolutely bonkers. It was a time when the world was still grappling with the pandemic and many people were stuck at home, turning to the stock market for entertainment and investment opportunities. Before the madness began, GameStop was trading for less than $20 a share. The company was struggling and many believed it was on its last legs. The future looked bleak for the once popular gaming retailer. Then, almost overnight, it shot up to over $400 a share. What happened? Wall Street Bets happened. This online community of retail investors on Reddit decided to take matters into their own hands. People on the subreddit noticed that hedge funds were betting against GameStop. They saw an opportunity to challenge the big players in the financial world. Hedge funds were shorting the stock, hoping it would go down so they could make money. Short selling involves borrowing shares and selling them, with the intention of buying them back at a lower price to return to the lender, pocketing the difference. Wall Street Bets decided to fight back. They saw this as an opportunity to not only make money but also to stick it to the hedge funds that they felt were manipulating the market. They started buying tons of GameStop stock. The collective buying frenzy caused the stock price to skyrocket, creating a short squeeze. This drove the price up and squeezed the hedge funds, costing them billions of dollars. The hedge funds were forced to buy back the shares at much higher prices, leading to massive losses. It was a David versus Goliath story for the internet age, and David won. The GameStop saga became a symbol of the power of collective action and the impact of social media on the financial markets. It showed that even small investors could take on Wall Street and win, at least for a moment. Section 5, AMC from popcorn to portfolios. GameStop wasn't the only meme stock to make headlines. AMC Entertainment, the movie theater chain, also got caught up in the frenzy. AMC was struggling during the pandemic, people weren't going to the movies, and the company was losing money. But then the meme stock magic happened. Wall Street bets embraced AMC. The stock price soared, going from around $2 a share to over $70 a share at its peak. It was insane. People were making and losing fortunes overnight. Section 6. Shaking up Wall Street. The meme stock phenomenon sent shockwaves through Wall Street, creating a frenzy that no one saw coming. Traditional investors were caught off guard, unprepared for the sudden and unpredictable market movements. They didn't understand what was happening as the usual market indicators failed to explain the chaos. They weren't used to seeing stocks move so dramatically based on social media hype, a new and powerful force in the financial world. The meme stock craze also raised questions about market manipulation and the influence of social media, sparking intense debates among experts. Some people argued that what happened with GameStop and AMC was illegal market manipulation, pointing to coordinated efforts to drive up stock prices. Others said it was just a bunch of people exercising their right to buy and sell stock, a grassroots movement challenging the status quo. Online communities, particularly on platforms like Reddit, played a crucial role in this phenomenon, banding together to take on Wall Street. The impact of meme stocks on the market was profound, leading to increased volatility and a re-evaluation of market dynamics. While some celebrated their unexpected gains, others worried about the long-term implications for market stability. The meme stock saga highlighted the power of collective action in the changing landscape of investing, where anyone with a smartphone could influence the market. Section 7. The future of meme stocks. So what's next for meme stocks? Are they here to stay, or was it just a flash in the pan? It's hard to say for sure. The meme stock frenzy has definitely cooled down since its peak in 2021. But the movement has shown that social media can have a real impact on the stock market. It's also shown that there's a growing appetite for alternative investments, especially among younger generations who are more comfortable with technology and risk. Section 8. Conclusion. A new era of investing. The meme stock saga is a fascinating case study in the intersection of finance, technology, and culture. It's a reminder that the stock market isn't just for Wall Street insiders anymore. Anyone with a smartphone and an internet connection can participate. Whether meme stocks are a passing fad or a sign of things to come remains to be seen. But one thing's for sure, the rules of the game have changed. If you enjoyed this deep dive, don't forget to like and subscribe for more insightful content.